What is going on, guys, and welcome back to another very exciting video. In this video, we're going to be talking about one of my top holdings in my portfolio, and that is Meta Platforms. Meta had the absolutely most insane week this week, going up over 20% in a single trading day. So in this video, we're actually going to take a look at the numbers that Meta announced in their earnings call, and then we're going to take a look at some things that are often overlooked by investors that have a huge effect on the stock price. And then last but not least, we are going to take all of this information, everything that was announced, we are going to take a look at the earnings projected over the next year for Meta and run our own analysis based off the PE ratio and give a price target for where Meta could be in a trading year. So I hope you enjoyed the video. If you do, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. Let's start off by taking a look at Meta's chart. So here today on Friday, they were down a little over 1%, but over the last 5 days, we can see that the stock was up almost 25%, which is absolutely insane. The first part of the trading week, we can see that the stock was trading around $145 to $150. And then on Wednesday after hours, the stock went absolutely insane and ran all the way up to $180. And then throughout the day on Thursday, the stock continued to run up, capped out around $195 before kind of reversing down and trading kind of sideways the last day and a half of the trading week. And when you look at their numbers that were announced for earnings, there's nothing really crazy that came out. So for Q4 revenue, they announced $32.17 billion actual revenue versus $31.65 that was expected. So they had a slight beat there. In terms of earnings per share, they announced $1.76 of earnings versus $2.26 expected, which is a fairly large miss. And then in terms of daily active users, they were basically in line with around 2 billion users expected and around 2 billion actual. Revenue is the one number that we actually saw beat compared to analyst expectations. And revenue has been something that has scared a lot of investors over the last few quarters. And this chart shows exactly why. We can see in 2021 Q2, revenue was $29.1 billion. In Q2 of 2022, it actually declined to $28.8 billion. And we saw that trend continue for Q3. So Q3, they announced in 2021 $29 billion, and in Q3 of 2022, they actually went all the way down to $27.7 billion. And then in Q4, we have still seen that decline happen. So they went from $33.7 billion to $32.2 billion. But the fact is, when investors are actually looking at these numbers, we have a whole different economy that has emerged over 2022. We've seen interest rates go up from around 2% all the way to 5+%, and we have seen the whole economy basically open up. And what that means is there are less people at home sitting on their devices, and Meta is still able to maintain these large revenue numbers. The stability of revenue has obviously been one catalyst. The other catalyst for the stock, potentially even larger catalyst, is a lot of price targets have increased. We have seen Evercore ISI announce a price target of $275, which is absolutely massive. That is almost a double up from where the stock was before earnings, trading around $150. And then Rosenblatt has also announced a price target of around $220, and Guggenheim has announced a price target of $210. An additional catalyst is that Meta announced $40 billion in stock buybacks. And remember that stock buybacks are always huge because what the company is essentially doing is they are reducing their float of shares on the market. And what that means is for every additional earnings, or even if earnings stay flat, the earnings per share will actually increase. So you as a stakeholder in the company, if you own shares of Meta, your percent of the company that you actually own is being increased when a company buys back their own shares. The other thing that companies do to repay their shareholders are pay dividends. And Meta currently is not a dividend payer, and it doesn't look like they are going to be anytime soon. They've kind of gotten back to a growth side of their business. And really what that means is they are not going to funnel money out to investors. They're going to focus on funneling it into the business, growing their business. But I would expect over the next maybe 5 to 10 years that Meta will eventually pay a dividend. They have a very solid advertising business. And I think at some point, them paying a dividend will help attract a lot of, dividend type investors and dividend growth investors. I want to close out the video by doing our own price target analysis. So what we are going to do is we are looking at the current year earnings. So for 2023, the average estimate earnings is $9.25. A low estimate is $5.11. $13.11, and a high estimate is $13.76. I want to close out the video by going over our potential price targets. So what we have here over in the green are the earnings projected for next year, and what we can do with those earnings is actually come up with a PE ratio. So just to show you the math real quick, basically we're just taking the price of $186.53 and dividing it by the potential earnings, and that gets us a PE ratio over here. And what we are doing here is we are looking at what could potentially Meta trade at. So right now, if they were over the next year to earn $5.11, we would see them trading currently at a 36.5 P ratio. And where we kind of determine is a fair valuation is anywhere from a 20 to 25 forward PE. And what that means for Meta stock is actually the stock would decline in a very massive way. So the stock, if it were to trade at a 20 forward PE ratio, would actually trade all the way down to $102.20. And if it were to trade at a 25 forward PE ratio, we would see the stock trade all the way down to $127.75. In my opinion, $5.11 is very low for what I believe Meta is going to earn in 2023. I think this $9.25 is a lot more of a realistic possibility. So what that would mean is Meta would actually be trading at a 20.17 forward P ratio. And what we can do is, again, compared to 20, we're going to see a slight decline in the stock price. So less than 1%, we would see the stock, if it were to trade at a 20 forward P ratio, it would trade down to $185, which is basically fair valuation of where it's at right now. If it were to trade all the way up at a 25 forward P ratio, we would actually see the stock spike up to $231.25, which would be almost a 24% gain from where the stock is currently trading. And if we see Meta actually have an amazing year, we could see them earn anywhere around $13.76 per share. And what that comes out to is a 13.56 forward P ratio. And then if we see the stock actually trade up to a 20 to 25 forward PE, we would actually see the stock price spike up to $275 at a 20 forward PE. That would be an almost 50% gain from where the stock is currently trading. And then if it were to trade up all the way to a 25 forward PE ratio, we would see the stock trade all the way at $344, which would be almost an 85% gain from where the stock is currently priced. The final thing that I wanted to point out is we talked about buybacks, right? So if they buy back $40 billion worth of shares and the average price is $200, we would actually see them buy back 200 million shares of Meta stock. And what that would do is the current outstanding shares is around 2.26 billion shares. So that would reduce the outstanding shares to 2.06 billion shares by this time next year. And what that would mean is that the shares outstanding would decrease by almost 10%, 8.85%. And what that would result in is an almost basically an 8.85% increase in the earnings per share. And that would get this average number to around $10.07, which would actually be a resulting PE ratio of 18.53 as opposed to this 20.17. So if we come in here and we put in this 18.53, we would actually see the stock trade up, around 8% compared to the 20 forward P ratio, or around 35% when you compare it to this 25 forward P ratio. With all of that said, we have gone over a lot of numbers in this video, so feel free to rewind, watch any of the sections over again, and if anything is still confusing, make sure to drop a comment down below and I can kind of talk through what I did and the math behind what I'm looking at. So if you have any questions, just feel free, drop a comment down below and I'll make sure to get back to you. Otherwise, I hope you enjoyed the video. I want you to keep in mind that all of this is my opinion. So I am a shareholder of Meta. I believe in the company, but make sure you are doing your own research. Look into these numbers. Make sure you are comfortable with estimates. Maybe you feel like Meta should trade at a 15 to 20 forward P ratio. Maybe you feel like they should trade at a 25 to 30. That's going to affect these numbers. The estimates that you are putting in as a personal investor are going to affect how these price targets come out. So make sure you are comfortable before you are buying any shares of any company, and don't just buy a company just because you watch some YouTube video on it. Keep that in mind and always keep that in mind. So overall, if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.